Hello Sector Watchers, welcome to the show. This is the 66th episode of Sector Spotlight. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam. And before we start the show, last week I showed you a picture that we had a lot of ice, or it started to freeze and we had natural ice. And this week we actually had a ton of snow and we are facing temperatures of minus 10 to minus 15 degrees Celsius, which is about, I think, like 5 to 10 degrees Fahrenheit, which is really cold. But I need to show you something that happened in Amsterdam yesterday on Sunday afternoon. And it's actually this clip here from people who actually, this is a crossroad inside or in Amsterdam, and somebody actually started to play music, and pretty loud. He was a DJ, and everybody started dancing on the street. And I thought it was actually quite, in this day and age, in these times, and everything that's going on in the world, I thought that was a pretty positive note and a positive, good vibe that it's actually possible for people to enjoy themselves on Sunday afternoon in Amsterdam on the crossroads. These people don't know each other. They're just there passing by. They stopped, danced to the music, that's it. Okay, enough of that. Time to start looking at some more serious things and do an overview of asset classes and sectors. As usual, we will start with the rotation of asset classes. Just quickly here on the left-hand side, let's rank that on percentage change, and we see that stocks once again had a pretty good week with 5.2% gain, and you see that on the tail where it was pointing downward last week, it has actually moved to the left, but it lost its downward momentum. So if we zoom in pretty much on the move that we had, that's 1, 2, 3, 4, 5. This is last week, and it was heading towards the lagging quadrant, and then we have 1, 2, 3, 4, 5, and you see that stocks have actually started to shift upward. So that's a positive note. It's pretty much, it looks as if it's getting back into the swing with the longer term picture as we know it from the stock market and the positive rotation. The other asset class that is really starting to pick up now is commodities. Discussed it many times over, and now you see that the tails for both DJP and GSG have curled back up. So if we make that same rotational figure, let me give you a little bit more space here. We go back 1, 2, 3, 4, 5, and this is pretty much the rotation that we saw last week, 1, 2, 3, 4, 5. And we see that both are actually coming out on top of the benchmark, which is the Vanguard Balanced Index Fund, 4.7 and 3.7%, so outperforming the benchmark. And then the third one that is outperforming this week is, or the fourth one actually, is the real estate asset class represented by the VNQ ETF. What we see here, the big difference between VNQ and the other three ETFs that we just watched, is that VNQ actually started losing momentum over the last 5 days, while the other three have started to pick up momentum. So from these four outperformers, I think that stocks, ITOT, and both commodity indexes are really worth keeping an eye on. So is real estate, because we'll see the chart later on. But especially the combination with the longer term tail, I think VNQ is a little bit more dangerous. And then on the left hand side, we see the opposite rotation of stocks. We see shorter tails. We see high yield, corporate bonds, government bonds, all rolling over downwards, starting to lose momentum. Let's quickly move to the right side of the screen, where we have the US stock market subdivided in these spider ETFs for the sectors. And we see that energy actually had a very good week with a gain of 8.2%. And that's vis-a-vis SPY stocks 4.8%. So energy picking up once again, doing really well. Although it is inside the lagging quadrant on this daily RRG, the performance that was picked up during the second part of the week, because this is also 5 trading days, so it's 2, 3, 4, 5. You see that energy was on a big move towards the lagging quadrant, and that big momentum down actually caused it to rotate into the lagging, and now we already started to pick up again while inside the lagging quadrant. Same goes for financials and materials. Let's work my way down through the list. Communication services, well inside the leading quadrant, losing a little bit of momentum. Financials picking up a little bit, inside lagging. Consumer discretionary, hard to see, but very. Let me just zoom that in, because you can see how the controls work. You can actually zoom in on those tails and see much better what it's doing. And it seems to be a reasonably long tail now, but you can see how short the distances from observation to observation, and in this case it's day to day, is. We're still moving towards lagging. So here we are, but the tail is very short. If we control this, you can see that the tail here for discretionary is really, really short. It's still on the right hand side, so it remains in a relative uptrend, I should say. Industrials picking up way to the left on the daily. Technology inside leading. We'll have a look at the weekly tail later on. That's again a very good sector. Materials underperforming. A little bit of uptick in momentum, but you see it's far away to the left. So it's on the weaker side on the daily scale here. And we have real estate, which did not pick up here vis-a-vis the sector. So as an asset class, it picked up quite a bit, but it started to lose momentum, and you see that those tails are pretty similar. And you can now see what the impact of relative strength is, or relative performance, because here we're comparing real estate with VBINX, and here we're comparing real estate with the stock market. And you can see that vis-a-vis the stock market, real estate actually underperformed, while vis-a-vis VBINX, which is a balanced index fund, real estate actually outperformed. So you never underestimate the power of a benchmark, probably. Consumer staples, way on the left, picking up a little bit of momentum, started to move to the right. Utilities, sort of indecisive, very close to the benchmark, started to lose momentum, snaking around that vertical axis. And then we've got healthcare actually moving into the lagging quadrant. That was my stealth rotation that we discussed last week. That was coming from the weekly RRG. And I had actually expected a little bit more performance from healthcare. It's still not bad, but this is quite disappointing. Let's quickly move to put all of that into perspective on the weekly RRGs. Let's update this one here, and I'm gonna go to my dashboard, bring up my chart lists, and take my sector spotlight. So this is my starting point, and then of course we need to look at ITOT, at stocks, and we see this massive uptrend. That's, you know, super good, no problem at all. Reconfirmed by taking out the previous highs. Vis-a-vis VBINX, that uptrend is still there. So clear preference for stocks inside an asset allocation model. The two tails here, GSG and DJP. Those are the ones that we actually need to spend a little bit of time on, because here's GNX, that's the index. This one triggered me because you see that it is now, it is a very straight line up, but in terms of relative strength we have so much more upside potential, and the RRG lines that have bottomed out just above and just below that 100 level, they confirm the improvement that is visible in this relative strength line. And taking out this horizontal resistance is another sign of strength for commodities as a group. And in the near term, I think that we should be watching levels like, I don't know, around 500 in GNX, dollar GNX, as a potential resistance area or potential price target. The other commodities are DJP. Difference is the energy component, much bigger in GSG. Here you've got DJP, which is a little bit broader group of commodities, and you see that it is actually also breaking above this horizontal level. And you see here that the downtrend in relative strength has been so strong, it's taken so long, that the fact that we had this massive rally in price is, you got to look at this from a bigger picture. And here you can see that commodities are actually, it looks like as if they're just beginning, especially in terms of relative strength. So, VBINX that we are watching here is a combination of stocks and bonds. So commodities is not part of that benchmark. So it's not impacting the benchmark. Adding commodities to your portfolio gives you a position exposure to an asset class that is uncorrelated, or, well, maybe not uncorrelated, not represented in your benchmark. So when you do that right, it gives you a very good opportunity to outperform your benchmark. For example, if stocks and bonds both go down and commodities go up, if stocks and bonds both go down, by default, VBINX will go down because it's only made up of stocks and bonds, no commodities in there. So if you have commodities in an asset allocation portfolio and they go up with the rest going down, that obviously is a huge winner for commodities as an asset class. And it looks as if we're heading that way now in an asset allocation setting. Let's move to a little bit longer term view for the ETFs and see what they do in a longer term setting. I just need to head over to the equity sector. So here's materials, and let me rank that here. We see that materials is inside the weakening quadrant, heading for lagging, and we see that weakness in relative strength popping up. I mean, this price chart is not bad, but we're not at new all-time highs. We came off the high, corrected, found a little bit of support, but relative strength is rolling over, and that's what you see here in the RRG. And I think it's getting increasingly more difficult for the materials sector to pick up that rotation. It's still possible, but I would have preferred to see the relative strength line hold above this support line and curl up. That did not happen. So makes it less interesting as a sector. Communication services is quite interesting, and I have to zoom in again here to show you what's going on, because it's quite rare. Usually we have these clockwise rotations, and now you see, let me scroll that back. We had that rotation down and we're hooking to the right. It looks as if we're rotating counterclockwise, but I'm going to take you back to the dailies and highlight the rotation of communication services, and you see that that sharp hook is actually the result of this clockwise rotation as we saw it on the dailies. So communication services seems to be getting back on track, and if we look at that on the price chart, then you see that it's actually confirming that it's moving to new highs in price. what would really help is a decisive break above previous resistance in that relative strength line. RRG lines are taking an advance on that, but I really would like to see that relative strength line breaking above that range and out of that range. That would put communication services back on the radar for a continuation of that relative uptrend. Energy are making a long move through leading, and we can see why, and it's the strongest sector now. Sorry, this is the daily. I should have made that the weekly, so it's still here. It's still the strongest sector. So on the weekly, it's the strongest sector, but it's losing momentum. Why we are losing momentum is what you see here. You see this pickup, so this early stage move that energy went through, and this little leveling off here of that green line, that's the rollover that you see on the tail, and it's caused by that basically testing resistance rolling over. I think that if XLE manages to break this overhead resistance area, and there's a little bit more left, slightly higher, that will push that resistance level back up and make both the RRG lines move higher and bring energy to the top of the list. Going for a quick break. I'll be back right after that. Financials going through somewhat similar but less wide rotation as energy. And if we bring that up on the chart, then we see that energy is pushing against an important resistance level. Again, the previous attempt to break failed, but if the next rally, we're talking basically this week, manages to break above that resistance area, it's very likely that we will see a break out of this sort of consolidation bottom-like formation in relative strength, and it's another sign of strength for the financial sector. So please keep an eye on that one. It seems to be picking up again. Industrials, we just saw that it was sort of weakening on that daily chart, and you see that is, you know, trickling through the weekly tail that is now rapidly moving towards the lagging quadrant, and you can see the weakness. It's just like the material sector. It broke that uptrend that we saw since May last year, and the RRG lines are rolling over. Again, not per se a very bad chart, but we already saw, you know, sectors that broke to new highs, and that's obviously there's more momentum there, and industrials seem to be losing that for the time being. That's why it's pushing towards the lagging quadrant. Go to technology. That is a very nice rotation. It's actually rotated back into the leading quadrant, so the technology sector is back on track, I would say. And you see it here that we had a few of the wide range bars, but every week the weekly high was higher and the weekly low was higher, not necessarily the close, but it kept going. It didn't roll over in terms of price, and you see that it's still caught in that range on the relative strength chart, but the RRG lines are picking up, and that's why it's pushing into the leading quadrant. We do need to see relative strength break to new highs to actually make this a sustainable move into the leading quadrant. So we do need to keep an eye on that. But the fact that we're breaking to new highs again in tech is definitely a good sign. Disappointing is consumer staples, no doubt about it. But you know, it's probably to be expected when the market is doing really, really well and stocks are outperforming. Then a defensive sector like staples is usually not the best sector. And you see this topish formation here, double top sort of completed, but especially this relative strength just moved down, and that's pushing staples further into the lagging quadrant. Typical defensive sector that is not working right now. Here we see real estate, which was on the dailies on the good one, but rolling over, and we saw there that communication services and technology were actually doing a lot better. And here you see why that loss of momentum. That's because of that weekly rotation for real estate is still far to the left and basically still a very weak sector. If we bring that on the price chart, you see that it is sort of breaking out of that range, but the relative strength is really weak, and we need a lot more upside price action before real estate will be one of the better sectors, one of the really outperforming sectors. Quite frankly, I don't see that happening anytime soon. I mean, in terms of price, there's a bit of potential there, but in relative strength terms, not really fantastic. Rapidly to utilities, another defensive sector, just like staples, caught in the doldrums, relative strength pushing to new lows. There's a little bit of uptick in relative strength momentum because of the flat here after the break. That's what you see here on that tail. But you can see that it is still far to the left on the RRG, and that's, usually indicates, well, always indicates a relative downtrend, and that's what we see on this chart right here. Healthcare, as I said, my stealth rotation of last week, it's not working yet. It's actually, this week was pretty disappointing, but the good news, we're looking for good news, is that we're still moving to the right, so that that loss of momentum on the daily has not impacted the direction of the tail on the weekly too much. We're still going to the right, but you can see that it is it's getting increasingly, we do need a lot of upside relative momentum to actually push that weekly tail further to the leading quadrant, because we are at risk of rolling over here. Tail is relatively short, so I'm going to keep an eye on that. If we look at the price chart, that is still above the breakout level, so it's still very well possible that we're looking at a short-term correction and that we pick that up. But in all honesty, this break lower, we're now on the way to the real low of relative strength that we saw early 2020. If that also gives way, then we got to admit that that stealth rotation is going stealth, but is going downhill and is going to roll over. So be careful with healthcare. That slightly positive sign that I thought to see last week is not really playing out yet. Well, I'll give it the benefit of the doubt for this week, but I'm a little bit less enthusiastic than I was last week. Here we go for discretionary. That's a different story. That's really picking up. That's doing well. And it's on its way back to the leading quadrant. And obviously that's a very important sector to drive the general market higher with the large cap names, Tesla and Amazon in there. Price is no problem, but just like communication services, technology, and discretionary here, they're all doing it in price. They're pushing against resistance in terms of relative strength. If this week those relative strength lines manage to push above those previous highs, then we're going to see a strong rotation further into the leading quadrant, and most likely higher stock prices driven by discretionary, communication services, and technology. To wrap up the show, I want to have a quick look at the rotation of the major currencies. And I got a lot of questions recently about currencies, especially about cryptocurrencies. Let's start with the fiat, with the regular currencies, and that's the RRG that you see on the left-hand side. You see that pretty much it's the G10, so it's G10 currencies. You see that pretty much all of these currencies are rolling over. They're heading south or southwest versus the US dollar, which is the base for this basket. This generally tells you that the US dollar is strengthening versus all other currencies. That's what you see on this chart. And That's what you see on the price chart on the right. That's euro dollar. What you see here, this rotation, is this moved down pretty much. So you see when euro dollar goes down, that means a strengthening of the US dollar, because the denominator is getting bigger and the denominator is getting smaller, so that's where you go down. So this dollar strength, that's what you see visualized in this RRG. How that's going to play out, I don't know. We're still resting at support. These can turn around. Doesn't really matter. What I want to show you and share with you is that we can also make a similar picture of cryptocurrencies. And we can do that two ways. There's predefined baskets. The first one is a universe of cryptocurrencies versus the US dollar. And where we saw that the US dollar was actually strengthening versus the other currencies, what we see here is that pretty much all these cryptocurrencies are strengthening versus the US dollar. The further they move to the right, the stronger they are in US dollar terms. The only one that's actually really losing is Ripple, XRP, versus the US dollar. So this is one way that you can actually approach the cryptocurrency universe. Now, what is more interesting, I think, is if you plot all these cryptocurrencies versus Bitcoin. Bitcoin is sort of the mother of all cryptocurrencies. And now it becomes really interesting, because what we do here, if you look at this rotation, Bitcoin is the center of the chart. You see that Bitcoin is stronger than most of these cryptocurrencies. They're a little bit up, but they're all to the left. There's two that are really outperforming Bitcoin, and that is Ether and it's Cardano, ADA. And that's what you see here on those tails. You see ADA, Cardano powering into that leading quadrant, and you see Ether actually straight through the center of the chart beating Bitcoin. So, but all the talk about Bitcoin and the strength, and of course, Tesla just announced that they bought $1.5 billion worth of Bitcoin, and that's caused Bitcoin to break to new highs. That is a massive sign. That is a very strong chart, and I really think that the long-term trend for Bitcoin is up. But when you look at this, then at least in the near term, I think you also would need to have a look at Cardano and Ether, because they are moving into the leading quadrant versus Bitcoin. And if you look at those charts and you look at Cardano, and this is Cardano expressed in Bitcoin, and just note the ticker symbol that I'm using, because we've got dollar ADA and we've got BTC, dollar ADA USD, and we've got dollar BTC USD. In order to express ADA in Bitcoin, you've got to do the spread of the two, the ratio of the two. So that's ADA USD colon BTC USD, and that's what you got. Now look at this. If this breaks, that is a massive range breakout. And the same goes for Ether. If that breaks, that is a massive breakout. So I'm watching Bitcoin to go higher, but I'm definitely looking at Cardano and Ether to break out of these long bases. Ladies and gentlemen, thank you for watching. This was Sector Spotlight for this week. Please stay safe and stay healthy. I hope to see you back next week. If you like the show, give us a thumbs up. Thank you very much.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.